demand in the U.S., a slowing demand outside, and the translation impact of what is going to be a weak foreign currency into the U.S. dollar. For debt financing, well, we know that the foreigners are not going to be exactly excited to buy the Fannie Mae's and the Freddie Mac. Are they going to continue to buy the treasuries? That may be the only issue. The dollar is not going to pay attention to these things. The dollar is only going to pay attention to these negatives once the volatility declines, and then we start to worry about the structural aspect of the U.S. economy, and that will happen early next year.
Yeah, Greg, the problem, of course, is there's an echo chamber aspect to this. In other words, as the market sells off, it's like knocking the top glass off of a wall full of wine glasses. It knocks all the glasses underneath it off, and it forces more selling, which then exacerbates the currency situation. Do you have any insight as to how much money is offshore, and as a result, as we bring it back onshore, we get a sense of where we might be in the cycle of repatriating some of these dollars?
That's really the million-dollar question. No one really seems to know is how deep these repatriations are, and there's really also to understand a significant lack of liquidity in foreign exchange markets now. With bank balance sheets so tied up, people aren't willing to accept risk on the banking sector. So we're seeing trades and markets extend more than they should right now. So we could possibly see the euro push to 127.50 right now. However, we think it's ultimately going to grind back up towards 135 before year end.
All right, gentlemen, thank you both. Melissa, what's going on the floor?
Thanks so much, Phil. I'm talking to some people here on the floor, and they're really saying that what is fueling the selling today is margin calls and then redemptions, and also this whole notion of this global economy had worked for us, now working against it, of course, because it is the fears of the global recession that are sending things like commodity prices lower, that is getting oil stocks lower, and so on, and we can see the effect here on the market. And now off by 561 points. Let's bring in CNBC's managing editor, Tyler Matheson. And Tyler, what are your thoughts on the day like today?
Well, I think what I'm seeing here today, Melissa, is the idea that good news means nothing. You have some good news in the credit markets. There seems to be, the spreads are coming down, LIBOR coming down. What we had hoped 2 weeks ago would be a tonic to the market, but the market is just not paying any attention to because the focus has changed. The focus has changed to a strengthening dollar, potentially weakening exports for U.S. companies. Concern in companies like Boeing lost 7% today. Concerns there that their business may not be as strong in a global economy that is retreating, and obviously a U.S. economy that is clearly in the fetal position right now, with no willingness on the part of businesses to spend. In fact, quite the contrary. Every day you look at the left-hand column of the Wall Street Journal and you see 5,000 jobs here, 1,500 jobs there, 10,000 jobs there, like this morning with Merck. So there's plenty of bad news to look at, but the market isn't even listening and reacting favorably to the good news, which is what we had hoped it would do a couple of weeks ago when we said what's got to happen is the credit markets have to thaw.
Steve Leisman, are you there? I'm curious what you're reporting back is either from the Treasury or the Fed for those on the street who are concerned about structural aspects of the market, whether it's the electronics and the mechanics of the sort of the cascading selling that we get towards the end of the day, and other aspects that are, again, structural, that have nothing to do with how much money the Fed may put into the system or how much commercial paper they may buy, but have to do with the cascades of selling that we tend to run into in these situations.
I think they look at stocks differently from how they're looking at credit these days, Dylan. In a different world, I think they look at stocks as a worse-off sign. But when stocks react the way they have in the last several days, and check me if I'm right about this, Dylan, but somebody just told me that the VIX is actually higher than the price of oil right now.
Yeah.
Is that right?
Yeah, close to it.
It's close to it.
They're basically even.
So whoever thought that would happen? I mean, you have this